2 Friday Night Lives in a row. Oh my goodness, we might actually be getting back to something. Good evening, everyone. It's Debbie Hatch. I wanted to hop on here and just do a little bit of an update. I've posted maybe last week, the week before, I don't really remember the date, in my feed a PDF that had all of the updates for 2023, but these videos, once I'm done with them on Facebook, actually live on YouTube, and I have not had the opportunity to do a video on YouTube yet with the updates for 2023, so I thought this will give me an opportunity to hop on. If anybody else is here watching live, then you can certainly ask questions or talk to me about the topics if there's something that's not clear, but then I will have this for posting on YouTube as well. So this time of the year, there are always a lot of updates. We're getting the new information for 2023 that's coming out a little bit at a time. I would say that right now, hey Trisha, welcome. I would say that right now we've got most of the numbers for 2023, but there will still be a few that we don't have. So the first thing that I wanted to update you on is the Social Security tax for retirement, old age, survivor, and disability insurance. If you're working for someone else, then you pay a tax of 6.2% out of each paycheck for your OASDI. If you're working for yourself, you pay that 6.2% as the employee and another 6.2% as the employer. But that tax is applied to a certain amount of dollars. So for this year, it was on $147,000. It's going up to $160,200 for 2023. So that means that you would pay the tax up to a total earnings of $160,200. And if you make more than that, then once you hit that limit, that OASDI tax would go away until the next calendar year. You would start paying it in 2024. While you're working and you're paying that tax, you're accruing Social Security credits, or sometimes people call them quarters, right? It takes a certain amount of money for you to get one credit or one quarter. That's increasing for next year as well. It will be $1,640 of earnings for you to earn one Social Security credit or quarter. You can only earn 4 of those in a year, regardless of how much money you earn, and you're going to need to have 40 of those plus be at least 62 before you're eligible to draw a Social Security retirement check. So that is changing. The earnings limit is changing as well. Now here's when this applies. If you retire from the federal government under the Federal Employees Retirement System, or FERS, and you're receiving the FERS supplement, or if you're drawing your Social Security retirement benefits and you're under your full retirement age, which is 66 to 67, depending on the year that you were born, if you're drawing under that age, then you're limited in the amount of money that you can earn from another job without impacting your benefits. The earnings limit is going up to $21,240 for 2023. And when we talk about the earnings limit, we do mean wages from a job. If you're drawing another retirement, maybe from private sector or a military retirement, that's not going to impact you. Cashing in your TSP or drawing from an IRA is not going to impact you. Interest, dividends, none of that stuff. So wages from a job, you can be receiving your FERS annuity supplement or drawing your Social Security under your full retirement age and make up to $21,240 without impacting yourself. TSP contributions might be going up. Might, I want to stress that word. The Internal Revenue Service is talking about potentially raising the amount of money that we're allowed to put into our 401ks and our employer-sponsored plans like TSP. That hasn't happened yet. Right now, they're talking about going up to $22,500 for regular contribution, which anyone at any age, regardless of when they were hired, can do. And then we have the catch-up contributions, which is limited for those people that are going to be turning 50 or older in the coming calendar year, potentially going up by $1,000 to $7,500. I will definitely update you when we see the confirmation coming out from the Internal Revenue Service that those limits have increased. Right now they're talking about it. Again, it hasn't happened. I want to be very, very clear on that. Interest rates for civilian deposits, redeposits, military deposits. So if you are paying for prior temporary time or maybe a seasonal appointment that you worked in the past, if that happened prior to 1989, or if you are making a military deposit, buying back your military time so it will count towards your civilian retirement, if you don't pay that off within 3 years of being hired by the federal government, then there's interest that is added onto the balance of that deposit. The interest rate for this coming year is going to be 1.375%. And that is a cumulative interest. So I do want to stress, if you're making a deposit of any type, sooner is definitely better. The longer you wait, the more you're paying in interest, as we are adding interest on top of interest going through time. You've got questions about making those deposits, especially military deposits, let me know. I have already done a video on that, but I'm happy to link it below for you if you want to watch that. Again, you haven't had an opportunity to do so. The amount of money that we can put into health savings accounts has increased for 2023. Now in HSA, we talked about those last week, allow me to have some money withheld from my paycheck before I pay taxes, put it into this health savings account where it can grow. I can only do an HSA though if I am enrolled in a high deductible health insurance plan. So that's definitely something to be aware of. And again, I did a video on that just last week. If you haven't seen that and you can't find it easily, let me know. I'll link that below as well. The health savings account contributions going up to $3,850 for this coming year. If you are enrolled in a self-only health insurance, if you're enrolled in a Self Plus One or a self and family health insurance, then you can contribute up to $7,500 in this coming year to your health savings account. Plus, if you are 55 or older, there's a catch-up contribution for HSA, which allows you to put in the base amount plus an additional $1,000 if you're interested in doing that. Flexible spending account contributions have also increased for 2023. For the FSAs, anyone that is eligible to participate in the Federal Employees Health Benefits Plan is also eligible to participate in an FSA. So for this one, you don't need to have that high deductible plan. You don't even need to be enrolled in FEHB. If you are eligible to be enrolled, you can do a flexible spending account. For the health care flexible spending account and also the limited expense healthcare flexible spending account, which covers only dental and vision expenses and only if you have a high deductible health insurance plan with an HSA. The healthcare and limited expense going up to $3,050 for this coming year. We also have a dependent care flexible spending account, which reimburses people for the cost of having someone cared for so that they can work. That one remains at $5,000 for the coming year, and it's been at that number for a couple of years now. No idea when or if that's going to go up. They have announced, and this was just this past week, the carryover balance for healthcare flexible spending and limited expense healthcare flexible spending is increasing to $610 for the coming year. So you have a use period from January 1st to December 31st, but if you don't use all of your money during that period of time and you do sign up to do a flexible spending account of the same type for the coming year, you're allowed to take $610 forward. That means that if you don't know what you're going to have for expenses, flexible spending accounts for the most part are use or lose. So sometimes people are really hesitant to participate because they don't want to lose any money at the end of the year. I mean, putting in $500 or $600 essentially comes with no risk, because if you don't use that money in the coming year, as long as you sign up to do an FSA in the following year, you can roll that amount forward. The only time I would say that you need to be careful with that is if you're planning to retire. We can't have flexible spending accounts in retirement. So in that case, then anything that you have in there would be forfeited when you go into retirement. But if you're not planning to retire, if you're going to continue to work, then again, doing a minimum of $500 or $600 really comes with no risk, because you can just carry that into the next year anyway. Medicare Part A deductible. So this is not a benefit but it is the minimum amount that is due for Medicare Part A, which covers inpatient care and hospice, is $1,600 for the first 60 days in 2023. And after that, there's a coinsurance of $400 per day up to the 90th day. Then it goes to $800 per day. Now, with those, if you don't have another health insurance, you may be covering those deductibles and copays, deductibles and coinsurance out of your own pocket. But if you have another insurance, then it will pick up the copay, coinsurance, and deductible for you. You wouldn't have to pay that out of your own pocket. For beneficiaries that are in a skilled nursing facility, the daily coinsurance from 21 to 100 days is $200 a day. And Medicare Part B deductibles are going to be $226 in this coming year. After that deductible, there is a 20% coinsurance or copay. You've got another insurance that's going to take care of it for you. You don't, then that 20% may come out of your own pocket. We've actually seen premiums for Medicare Part B go down a little bit in this coming year by about $5 or $6. It's not a whole lot, but they have gone down. So those are standard premiums will be $164.90 per person per month. And that is if, as a single person filing an individual tax return, your modified adjusted gross income was $97,000 or less. Married couples filing joint, modified adjusted gross was $194,000 or less. If you make above those stated limits, then you do pay more than that standard premium of $164.90. And there are graduated amounts, like the table shows 5 or 6 different levels with different amounts of money. And based on where you are in that income range, you pay that additional amount for your Medicare Part B. That's everything I have as far as the updates to numbers go for 2023, and happy to share those with you. Happy also to answer any questions if you have them. If you're on live, I've got about 8 people in here. You can definitely hop in the comments right now. I'll hold on for a second and see if I have anything pop up that I can answer for you. Otherwise, if you're watching it on the replay, let me know that you did so. Let me know if you're looking for one of those other videos. I'm happy to link it for you. And as always, if there's anything that I can answer for you regarding your federal insurance or your federal retirement, your Social Security, your Medicare, let me know. I'm happy to help. I hope you have a great weekend. And those of you that were here live, thank you so much for joining me. If you're watching on the replay, thank you so much for doing that as well. Take care of yourself.